When a taxpayer owes a large sum of money to the IRS, there are options that are available, and one of these are the installment agreement programs to pay the tax debt over time. Hi, I'm Gary, and welcome to TaxBulldog for the best thoughts and ideas for trimming your tax debt. Now, these videos are to help you to help yourself to avoid costly professional fees. If your situation has a level of complexity, then you may want to consult a tax professional. See my video on selecting a tax professional to represent you at this link, and I will put that in the description below. Now, these videos will at least give you an introduction of what to expect and to know when someone is just misleading you. Before I start, I have to make a few disclosures that are important. For purposes of brevity, I'll list these in the description below, so be sure to read them as they do contain important information you will need to know. Now, in these videos, I will make references to links and resources on the web, and often I will display these links on the screen, and I'll put them in the description below. And if the link is lengthy, I'll just list it in the description below. Now, there are basically 6 types of installment agreement programs. This is not in any particular order other than going from simple to complex. And I'll explain these briefly. The first one is the guaranteed installment agreement for when you owe less than $10,000 and you can pay it over 3 years. The second one is the streamlined installment agreements, and this comes in 2 types. One is if you owe less than $25,000 and you can pay it within 6 years, no financial information is required. The second one is if you owe between $25,000 and less than $50,000 and you can pay it within 6 years, some minimal financial information may be required. Now, in these agreements, you may avoid a tax lien if you agree to a direct debit payments from your bank or a payroll deduction. Third is a new one called the Expanded Installment Agreement if you owe more than $50,000 and up to as much as $150,000, and you can pay it within 7 years. Now, this is a third addition to the line of streamlined installment agreements, like the 2 I just mentioned before. Now, this one may require some financial disclosure and a bank direct debit agreement or payroll deduction to withdraw funds for making your payments. Now, agreeing to a direct debit payment or payroll deduction will avoid tax liens from being filed even up to these high balances. Now, 4, this one is the graduated installment agreement. Now, this is where you can start out with lower than normal payments for the first 6 months to 1 year of the agreement, so you can rearrange your finances to meet the requirements. Then after that, the payments go up to what the IRS has determined to be your ability to pay. Now, the 5th agreement is what we call the regular full disclosure installment agreement. This one has been around for a long time, and this is what they used to use routinely all the time. This is where the IRS will review your financial profile in detail and will determine what you can pay. We like to avoid this one if at all possible, because it gets to be very in-depth and invasive. Now, 6 is an installment agreement that is called the partial payment installment agreement. This is used when none of the other agreement types will pay off the tax debt within the remaining statutes. This one is sort of like a modified offer and compromise. After an in-depth review of your financial profile, the IRS will determine what you can pay. Then you pay that amount each month until the statutes expire. Then the remaining tax debt dissipates into thin air and you no longer owe it. Now, in any of these installment agreements, they are subject to periodic review and change. Sometimes reporting from third parties or financial transactions may trigger a review to see if you can pay more. Now, the installment agreement I'm going to talk about in this video is the Expanded Installment Agreement. So to get down to this subject, now you can find videos on the other types of installment agreements on my YouTube channel here, and I'll list the links to those in the description below. Now, this Expanded Installment Agreement plan was a temporary test program, and it was slated to end on September 30th, 2018, just last year. Well, it proved to be successful, so it became a permanent option. I believe this new expanded installment agreement to be a great option for those who owe between $50,000 and $150,000, so long as the taxpayer can meet the required payments. So, a taxpayer can qualify for the expanded installment agreement when they owe between $50,000 and $150,000, and the term for repayment is 84 months, which is 7 years. For example, if $80,000 is owed, the monthly payment would be $952. Up in these higher amounts, sometimes these monthly payments can be quite steep. And in this, little financial information disclosure may be required. Now, that's a good thing when we can keep it simple. Again, the IRS will not file a tax lien if the taxpayer agrees to make payments by direct debit or payroll deduction. If a tax lien is already filed, they won't release that, but further tax liens will not be filed as long as the terms of the agreement are met. Additionally, installment agreement user fees will be greatly reduced by using the direct debit or payroll deduction. Now, installment agreement fees can be as high as $225. Now, no financial disclosure and no tax liens is a huge concession by the IRS. They are trying to be aware of the damage that tax liens can do to taxpayers' financial affairs and creditworthiness. Now, the IRS collection statute expiration dates, otherwise known as the CSEDs, will have to be considered. The IRS collection statutes are 10 years from the date of assessment, not the due date of the return, unless it was filed before the due date. Now, some events can extend the statutes if collections is suspended for any reason, such as a bankruptcy or an offer in compromise submission. Now, the tax debt to be paid under this plan must be paid off before any of the statutes expire. Now, just as a note, the IRS applies payments in this order, also called the PITO rule. Payments are first applied to the penalty, then to the interest, then to the tax, and then to other fees and expenses. This is much like how payments are applied on a mortgage. The interest earning portion is the last part to get paid down. Now, to apply for this agreement, the taxpayer and his or her professional just needs to contact IRS Collections at 800-829-7650. Tax practitioners with a valid power of attorney have a practitioner priority line they can call for faster service. Now, this is a phone number not shared with the public. Tell the agent that you wish to set up an expanded installment agreement, and with just a few questions, it should be easily set up. To set up payments by direct debit or payroll deduction, you'll be asked to complete and sign a Form 433-D or other forms for payroll deduction. So in summary, you can request an expanded installment agreement when you owe between $50,000 and $150,000. You can pay it monthly over 84 months or 7 years. Little financial disclosure may be required, and tax liens will not be filed if payments are made by direct debit or payroll deduction, and that also greatly reduces the installment agreement user fees that can be as much as $225. So here's some resources, and I'll put these in the description below. TaxBulldog.com. Now, this is my website with many articles, documents, forms, and other information in regards to dealing with tax collection and audit issues. I try to demystify things. Links to other videos here on YouTube that explain other types of installment agreements, as I mentioned here. I will put these links in the description below. Now, /IRS Back Taxes book. This is a book that I wrote with my co-author about the Offer and Compromise program, and it's available online at this link. I am also doing a series of videos that follow the chapters of this book. The Tax Bulldog here on YouTube for helpful tax videos. I will put a link in the description below. The IRS on YouTube. This is a treasure trove of helpful videos for taxpayers. It's very good information, but do be aware these are brief and they do not give you all the insights and nuances on the topics. So in closing, thank you for watching this video. If you liked it and you got some useful information and ideas from it, please give me a like and share with your family, friends, and colleagues. This is all I do, and I do it well. Please subscribe to see my future videos as I produce them so you won't miss anything. Please leave your comments below. I would like to hear what other topics you may want to hear about. And please keep in mind that I primarily deal with audit, collections, and compliance issues. I don't address tax preparation questions. Now, I can answer general questions here, but for specifics, please contact me at TaxBulldog.com. Thank you.